Welcome to the Balancing Act podcast, where we share insights, experiences, and practical advice to help you grow, lead, and thrive in today's dynamic marketplace. In today's episode, we're turning our focus to the not-for-profit sector. We'll explore the most important challenges not-for-profit organizations face during an audit and how to navigate them with confidence and clarity. Joining us are Laura Buitrago, partner in our Business Solutions Group, and Karen Meisner, partner who leads our not-for-profit client service group. Together, they'll share insights from both sides of the audit process, offering practical guidance for not-for-profit leaders and finance teams preparing for audit season.
Hello, and welcome to an episode of the Balancing Act podcast here at Singer Lewack. I'm Laura Buitrago, a partner in the Business Solutions Group. This is a topic I've discussed many times with different board members or executive directors of nonprofits who always want to know, what should they look out for? What should they be concerned with when they're being audited? I'm very happy to introduce Karen Meisner, a partner who leads our not-for-profit client service group at Singer Lewack and has over 27 years of experience serving not-for-profit organizations in many capacities, including independent auditor, consultant, CFO, board member, and volunteer. Karen is also the board chair of the Cal CPA Nonprofit State Committee. So happy to have you here, Karen. Hello.
Thank you.
All right. So the first section we want to cover here is revenue recognition. Most of the money that non-for-profits receive is through charitable donations and grants. And so I want Karen to cover this in a little more detail where we talk about how you record these grants.
Right. So there's two major areas that we want to cover regarding recording grants and contributions. So the first is determining whether the grant or the contribution includes a donor restriction. So you may receive a grant or contribution where the donor has placed a limitation on how funds can be spent. So this limitation can be based on either a specific purpose. So like, for example, a nonprofit that's a food bank receives a donor restricted grant that can only be used to purchase food in order to create like meal packages for one of its distribution sites. So another type could be based on time. So for example, let's say you received a 3-year, $300,000 grant, and the donor includes a restriction that only $100,000 can be spent each year. So those are the two main types, with purpose and with time. And so when an organization receives grants or contributions with donor restrictions, it is important that the revenue and the expenses be properly tracked. So this makes it easy to determine that the funds were spent in accordance with donor restrictions. And also the proper tracking of restrictions determines how the organization's resources can be used. And most likely, the donor will ask for some type of reporting on how those funds are spent.
That's exactly it, Karen. And so this is something that my clients come to me all the time. They're very concerned with making sure that they are tracking these grants with donor restrictions properly because they feel the weight of the responsibility to make sure that the donor's wishes are being executed properly. So let's discuss what the accounting implications are. So first, you need to make sure your accounting team has the proper training to be able to read these contracts and determine if there is any sort of donor or time restriction. This is an area that not everybody automatically knows when they're hired to be in your accounting department. So this is definitely one area that I get the call to start reviewing contracts. I'm sure, Karen, I know I've even shown some of these contracts to you. It's not easy. And so sometimes you do need the experts to read these contracts and make sure you're catching everything. The other thing that I want to bring up is, depending on the type of restriction, you need to make sure that your accounting software and your accounting department has the proper workflow, operations, and processes to be able to properly track your donations. And again, as Karen just said, the way the money is spent. This is not something that happens automatically. I wouldn't recommend anybody using Excel for any of this. This is something that should be built into your accounting infrastructure. Very important. And most of the calls I get from nonprofits are to help specifically in this area. The other thing that I wanted to comment is there is also something called a conditional versus unconditional grant. That is also something I think, Karen, you and I have looked at contracts together where we realize there's a condition.
That's correct.
And so this is also not easy for somebody to find. Not everybody knows how to read and understand these contracts, but the language can be hidden in there. Right, Karen? I mean, I don't know if you have any examples that you could share of a condition.
Yes, definitely. So for example, let's use our food bank. So for example, if a nonprofit food bank receives a grant that has a condition that it must give out 500 meals in order to be entitled to receive payment of funds, then the condition will be met after the nonprofit has given out the 500 meals. And so another good example of a conditional contribution would be federal awards. And so those require that the nonprofit incur certain qualifying costs, which we commonly call cost reimbursement grants. So the condition would be meaning that they would have to incur the qualifying costs in order to receive payment. And so the third example is a matching grant. So let's say a nonprofit receives a grant for $100,000, but first they have to raise $100,000 of funds in order to receive that.
Wow. So very different accounting from restricted versus unrestricted. Lots to look out for there. So again, if anybody has any questions, I would recommend you talk to some people with a little more expertise in this area. So Karen, you've probably even given out control deficiencies or probably have even seen material weaknesses over this area, wouldn't you have?
Yes, correct. So the key thing to remember here is when you're looking for conditional contributions is to make sure that if you see there's a measurable performance barrier, as well as a right of return or a right of payment, that should be kind of your clear indicator that when you're considering whether a grant has a condition.
And so the moral of the story, revenue recognition for nonprofits is very different from the gap you see for private companies or publicly traded companies. So I know that I've spoken to nonprofits who hire controllers or CFOs who've only worked in private industry or a public company. They can't quite easily adapt to the nonprofit gap. So this is definitely one area, a very important area that you want to make sure you have the right skill set in place with your team. So that's the first area that we've seen as a challenge in an audit. The second area that we've seen as a struggle would be with the statement of functional expenses. This is extremely unique to a not-for-profit organization. This is not something that you would see in a private company's financial statements. I'll go ahead and have Karen go into a little more detail of what the statement of functional expenses even is.
Thank you, Laura. So the statement of functional expenses really shows the operations of the organization. So meaning how did the nonprofit spend their funds toward their mission? And so it also promotes transparency in the efficiency of expenditures of funds by program versus general and administration versus fundraising. So just to break it down in layman's terms, so let's use the payroll line item for an example. So on a statement of functional expenses, you can basically then display your payroll by how much of that is really going toward program, how much of that is going toward general and administrative, and how much of that is going toward fundraising.
Wow. And so you want to also make sure to leverage technology here, because to enter something like that, like a payroll expenditure, and apply it to program versus admin versus fundraising, you need to make sure you have the proper technology in place and the documentation to be able to know what rates to apply program versus admin versus fundraising. I do want to stress to you folks out there, the method of allocating something like payroll needs to be documented. It should be consistent, or at least there should be a good reason why you are allocating it the way you are. Usually, I've heard of nonprofits look at timesheets so that they can track what do their employees spend on program versus admin versus fundraising. This requires a little bit of process documentation, training of your accounting team to make sure you're getting this right and you can present it in a cohesive way in an audit. Karen, do you have any other examples or things that the nonprofit should look out for in this area?
Yes, so one of the things we as auditors really look at, since this is considered what we most likely will call a significant estimate, we make sure that your underlying methodology for your allocation is clearly documented, as Laura stated earlier, and makes sense, right? So for example, your CEO, if we notice that your CEO is only allocating 10% of their time to program, and they're charged with the supervision of 80% of the programmatic expenditures when they come to payroll, we might kind of challenge that maybe 10% is not enough to be allocated to program. So those are the types of things that your auditor will be looking at. And another thing your auditor will be looking at is, are your direct costs really being charged directly? So we will ask for the underlying expenses for those and make sure that they're being charged in accordance with the GAAP definition of what can be used for program versus general administrative versus fundraising.
I also know in speaking with board members, the biggest concern is a nonprofit doesn't want to show on their statement of functional expenses that they're spending all of their money on admin. When a donor gives a contribution, they want to know that most of that money is actually going towards the programs. So that's why it's extra important to track your expenditures in the manner of administrative, programmatic, and fundraising expenditures. That is something that can be scrutinized by donors. So you want to make sure you have the right backup in place, you have your allocation methodology documented, etc.
That's correct. And a lot of donors will look at how much of the expenditures are going toward program versus management in general versus fundraising. And each industry has a different requirement.
That makes sense. Okay, so that is the second area that we wanted to cover today. The third and final area that we are covering today has to do with the challenges that not-for-profits encounter in putting together the net asset with donor restriction schedule. This is a schedule that completely overwhelms a lot of not-for-profits. It's required to be done and presented in the time of an audit. To compile this schedule, it does take quite a bit of information that you have to extract from your accounting system. This is one area that I get a lot of phone calls. I even have clients that I don't do anything else for the not-for-profit except come audit time, they ask me to put together the net asset with donor restriction schedule. It does take a bit of time, and I'm always happy to do it. But Karen, what are your thoughts on this schedule? What is it exactly that the not-for-profits struggle with in this area?
So as auditors, some of the things we're looking for is an audit trail. So we're looking for, have you identified all of your contributions that have donor restrictions, and B, once those restrictions are met, meaning you either incur the qualifying costs or you incur the time frame that it takes place in, then did you release those properly? So one of the things that we'll be doing is we usually will select a sample of all your releases and make sure that those have expenditures that relate to them that are a part of that specific grant.
And this part, in my opinion, can be very easy or very difficult. If you have your accounting system set up properly, it's as easy as pushing a button and printing a report that would give the details of the releases of the restriction. And so, again, I would recommend to you folks out there, make sure you have the right accounting system in place, the right accounting infrastructure, because this does not have to be difficult. It can be everything can be tracked very easily. as long as the system is set up properly. It is very easy to have the accounting system fall apart because it was not set up properly. Karen, do you have any fun audit war stories that you can share in terms of the net asset schedule?
I think probably our biggest war story is a client's failure to provide us with backup to support their net asset releases, or
Ouch.
not creating a release, by grantor. And so I think that's probably the two main ones, and those are very time consuming to try to do at the time of the audit versus doing as you go along throughout the year.
Exactly. And the accounting system is definitely, if it's set up properly, is a way that this can all be tracked throughout the year. So anyways, those are the top three areas that are most challenging to a nonprofit audit. This has been shared through the eyes of the auditor and the client. I think we can conclude here that there is a lot of technology and resources available to not-for-profits to get through audits successfully. The main thing, I've said it already a couple of times, make sure you have the right workflows, accounting infrastructure, the right resources, and the right team in place so that you can navigate all these areas. That concludes our podcast. Karen, any last words?
No, I appreciate the opportunity to be here, and we look forward to talking to all of you.
Yes, absolutely. Thank you so much, everyone. Have a great rest of the day.
That wraps up this episode of the Balancing Act podcast with Singer Lewack. We explored some of the challenges not-for-profits face during an audit, from recording grants and contributions to preparing the statement of functional expenses to managing net assets with donor restrictions. We hope you found the insights helpful and practical as you prepare for not-for-profit audits. Be sure to check out the next episode of our audit series in June, where we'll be discussing credit unions, trends at the management, board, and supervisory committee levels. Until next time, keep balancing impact with accountability.